Welcome to our conversation today, Scott Burns. Thanks for joining us.
Glad to be here.
So, for our listeners out there, Scott and I met many years back while he was running Gov Delivery. Scott, just tell us a little bit about that business and what you learned by doing it.
Sure. I came out of Duluth as an athlete. I grew up in Duluth, Minnesota. I was an athlete. I left town to go to Colorado first and then Vermont as a 15 and 16-year-old. And then I got to college to ski race and didn't succeed at the level I wanted. And so I was sort of a bench warmer on this Division I ski team at Dartmouth. But as I looked around and kind of pulled my head up from skiing, some really interesting things were happening. And one was that Dartmouth was the first campus in the country that was connected by email. They actually didn't call it email. They called it Blitzmail. And I would use Blitzmail to organize students to show up at events and participate in different things. And I got very interested in technology at that point and left Dartmouth, worked at McKinsey for a couple of years. It was the dot-com boom, started helping a friend with a business. And we had an idea as part of that business to offer email communication services to government. And so having seen the power of email when I was in college, through that journey I just described, I got really interested in using technology and offering software, was looking at different opportunities for it, got really interested in this government opportunity. And we built a company around a very simple concept, which was that government should be just as good at marketing opportunities to foster a child or take a vaccine or whatever as companies are at marketing shoes. And that had never really been done before. And so we built a company originally called GovDocs, evolved to be called GovDelivery. And we built an entire company around that concept and built it out to be the number one place in the world for connecting government with citizens. But it really worked like you would see on a private company website. You'd go to a website, you'd see something you were interested in, you would fill in your information, and then GovDelivery would automate the process of keeping you up to date, whether it was city council minutes or snow emergencies or IRS tax changes or the UK Parliament's policies. All of that data, all of those updates were flowing through GovDelivery in the form of everything from a simple email update to an email newsletter. And then it evolved to include text messaging, social media. The company evolved quite a bit from there. And I guess what I learned along the way, I went through a lot of stages because I ran it for 16 years and we had some private equity ownership eventually. But I just learned to invest a lot of my time and energy in aligning what we were trying to accomplish inside of the team. So making sure everyone on the team understood the direction we wanted to go. They didn't necessarily understand exactly how to get there, but they knew where we were heading and what we were going to prioritize. And that allowed me to build this really great teams, I think, of people who could pursue our goals independently while also working with each other. And we got some great work done in a really tough market, built the company from the basement up to 250 people, and it's still thriving today. We must have done something right.
I'm also imagining, because as you said, you ran it for about 15 years and private equity was in there for a while. It was not a perfectly smooth line up and to the right. I'm sure you learned along the way a little bit about the importance of grit and perseverance and adaptability and stuff like that, which translates to what you're doing today.
Yeah, the skiing background was really useful because skiing is just a brutal sport. You work all year round and then everything comes down off into one run or a couple runs, and you can have a bad run that's your fault, or you can just have bad luck, like the wind is blowing uphill or there's fog moving in or whatever. And that's sort of the ultimate training for being an entrepreneur, I think, because entrepreneurship is all about, what's the old saying, luck is time plus preparation, or however you want to phrase it. I think that you have to prepare to give yourself a chance at success, and you have to work hard to give yourself a chance at success. And then it might not come anyway, or it might come in a form that's different than you expect. And so we had a lot of unexpected events. Obviously, we had 9/11 hit. We had the dot-com crash hit. We had the 2008 recession hit when we were just about to sell the business one time. and had run up an incredible legal bill to get that sale done. And then it ended up falling through. We had so many of those types of events, but also major changes in the marketplace. Text messaging became incredibly popular, and we were using email, RSS, which people don't even remember right now, but that became very popular. And for a period of time, people thought that would replace us. That was a new way of getting updates. Social media, obviously. So we had to constantly adapt to be, relevant. And actually, over the course of 16 years, we went from being this cutting edge thing we felt like we had to explain to everybody. We went from that to being the people they were saying were out of date because we were too focused on email and not focused enough on social media. So yeah, there was a lot of grit, and I went from being really a person who I think was very susceptible to the daily ups and downs to being, I think, a lot calmer. I operate with a sense of urgency, but I don't anymore get sucked into thinking that one event is the beginning or end of the world.
That's a great perspective to have, that you only get, or in large part, you learn by being in the fire and doing it yourself. Talk a little bit about Structural, 5.5 years or so in that business. So not as much time in the field on that project, but I'm sure that taught you some new things, as well as maybe shaped a little bit how you turned into being an investor, which we'll get to next.
Yeah, coming out of a 16-year run with GovDelivery that went through so many phases and really became my entire career at the time. I'd only spent a couple years at McKinsey and a year at a startup prior to that. I was looking at, what to do next. And I looked at different industries. I looked at whether there was a way to sort of volunteer or do nonprofit work or even become an investor at that time, which I explored pretty thoroughly. But where we were at in the market was just this very unique time where investors were putting a lot of money into companies. And so it was an easy time to raise money, particularly with the success I'd had with GovDelivery. And I had an opportunity to work with somebody I had always wanted to work with, this guy named Chip House, and to collaborate with the co-founder of the business, who was the guy who started the Salesforce Marketing Cloud, which was originally called ExactTarget before Salesforce bought it. And what I liked about him is he was this world-class, named Scott Dorsey. So I liked his name too. But Scott was doing world-class work from Indiana, just like we've been doing world-class work from St. Paul. And he built this extraordinary company, managed it to much greater heights than GovDelivery. I met him along the way because our companies overlapped a little, and he became a mentor. And I wanted to work with him, and I wanted to try a much more aggressively funded opportunity that could go more broadly at the market. And I had been exploring this idea of, could you put more data around human beings inside of companies, and by doing so, unlock more opportunity for the individual and better optimize talent across the company. So the idea of Structural was to better connect people inside of large organizations with their skill set, their interest, their talent, their capacity, all of those things. So Structural ended up partnering with this firm that was run by Scott Dorsey in Indiana. I brought Chip House on as my co-founder. Chip had been a senior employee at ExactTarget, and he lived in the Twin Cities. And we basically went after this opportunity selling Structural to big enterprises. We raised $10 million from some big VCs to do it. So I got a whole different experience, because GovDelivery, as you would remember, was very tightly funded because we were young and it was a tough environment to raise money. Structural was probably overfunded, certainly had excess of resources, and we hired sales leaders really quickly. We grew the team very fast. We pursued very big clients. We then ran into a global pandemic and some other minor issues, but we had to adjust and adapt. And the business ended up being, I think, more focused. We ended up, instead of trying to compete with Microsoft, we ended up becoming essentially an app within Teams. We made some other adjustments. We definitely pared back the team, and we ended up selling it to a partner after 5.5 years, which now to me brought together these two experiences. One, a very aggressively venture finance business, and the experience of building that up and selling it. Not as successful as GovDelivery, but in some ways it was a better piece of work in the sense that we had to pull some success out of a very difficult situation. and then the experience at Gov Delivery, which went through all these phases over a course of 16 years. And I felt like now I felt like I had the experience to get into the investing side with a little more knowledge of the different approaches entrepreneurs could take.
So talk a little bit about Mars and Power, your strategy there, and how you spend your time and the group's focus.
Yeah, well, it's been really good to have a chance to work with you with it. And I know you've seen us operate over time, but you probably recognize between me and my partner, John, this sort of long history of believing in this region and believing in the entrepreneurs in this region, whether we were funding them or whether we were building companies ourselves, in my case, a couple times, or supporting people, advising them, just recognizing that we are very capable of doing world-class things from here, and that creates a lot of investment opportunity. And so I had looked multiple times at the opportunity of starting a VC fund with a regional focus. John actually has done it before and had been part of Cherry Tree back many years ago that invested in Capella and Dolan Media. And, both of us had this view that this was a gap in the market because a lot of the firms that have started here, they might be based here, but they're not particularly regionally focused, especially the more sizable firms. And so John actually, and I had talked about this a lot over the years. And then Mairs and Power, which is a $10 billion asset manager, decided they were interested in getting into private capital and potentially venture capital. And so they brought John on to research the opportunity. He ended up deciding to launch a venture capital effort here. And in doing so, I came on as an investor in that fund and really supported and got interested in what he was doing, but I was still running structural at the time. And John was an investor in structural, so he didn't want to distract me at all.
Sure.
And after structural was sold, I came on what's now 2 years ago and built on top of the very good strategy John had in place. And our approach is really straightforward. It's basically to invest in disciplined businesses in the region that are tech enabled and that are expertise driven. And so what that means to us is we're really building on the businesses in the region that are driven by industry and market expertise rather than technology expertise. And we think it's a unique time to do that because the technology expertise is actually in many ways being commoditized for a lot of the market. So if you're building a virtual sleep clinic, which is one of our investments, or Koya Go serving the foundation market, which is the one you and I work on together, or Sidekick, which does construction site monitoring, any number of the companies that we work with, but actual technology that they need to deploy is not that complicated. This isn't deep tech or space tech or, breakthrough AI. They're leveraging some of those things and they're able to do it in unique ways, but the real complexity is around the industry expertise. And so we like in this region, businesses that are driven by industry and market expertise. We like things that have a little more traction. Our entrepreneurship culture is not the same as it is in California and New York. So you want to see that somebody can launch something, get it going, get that initial revenue traction. And we like that a lot. It also allows us to be more disciplined in the financial analysis we put forward when we're looking at a deal. And then, once the financial rigor and milestones are in place and we feel like the expertise is well aligned with the business that's being built, we'll look at an investment. And we've made now 16 investments. We have a couple more that are pending, and they all sort of follow this model. And then once they're up and running, we think that because they're regional, we can support them better. We can see them, we can support them with talent. We know the right service providers. There's a whole heck of a lot you can do on the diligence side and learning about a company and on the support side. When you're close, there's a lot you can do that you can't do if you're just talking to somebody over Zoom in Asia who happened to take your check.
One of the things that led us to work together here, that being Mairs and Power investment in Koya Go, as you mentioned. Koya Go as a SaaS product serving the foundation marketplace, was that I had interacted with John Bergstrom before, but I know as an investor, kind of like to have a little history as opposed to somebody come knocking on your door saying, I need to make payroll next week and pushing kind of aggressively to get something done real quickly. So I started talking to John about a coy ago, probably 6 months before we were even pulling our round together, and John had your group pulled together. So one of the things that I always like to have is some level of comfort with the entrepreneur, and there's a variety of ways to get that. What are two or three of kind of the key things that you like to focus on the front end? You meet somebody new, you get somebody sends you a new deck or executive summary, but what are two or the three of the first things, the key things that you find interesting and might intrigue you to dig further?
It's a good question. And, there's not, everyone presents a little differently and they're at a different stage. And I'm not terribly rigid in how I approach things. And we try to make sure the team's not rigid. So the first thing I'll say is that we are good at understanding businesses. It's what we do for a living. And so if you looked at the content I publish or the discussions I have with students or entrepreneurs, I think there's a lot of information out there that VCs provide about how to pitch them. And I would much rather you give me a poor pitch on a good business than a good pitch on a poor business. And I think that there's something to be said for that. I think private equity firms in particular, the bigger ones, get very good at understanding businesses, and they don't require the sort of showy pitch that some early stage VCs often kind of expect. At the same time, I like a good showy pitch like anybody, so we're flexible. What we do on the front end is we're trying to meet with 80 to 100 companies per deal we do. And we have a lot of different channels through which we're meeting people. So it's people like you that we know in the community. It's lawyers and bankers and investment bankers and people doing engineering work, and they're referring deals to us. Then it's our investors. Then we try to cultivate industry experts where we can, in healthcare and logistics, in the different industries that are strong in the upper Midwest, and make sure that we're telling them all the time, send us anything you see that looks interesting. And we get referrals that way. We have our investor base, which has a range of executives and entrepreneurs, and, people will come in that way, and then they can just email us and communicate it with us. We're very open to inbound messages from folks. We also go out, and if somebody's doing like a startup pitch contest or Techstars is making presentations, we connect with all those things too. So when we get a referral, it's often coming in with some context, but if it's just a deck, that's fine too. And we'll take a look. And if something broadly meets our criteria, it's in the upper Midwest, it's got some revenue traction, and it's expertise driven the way I described, we'll almost always take a half-hour meeting. It's not as hard to get a meeting with us as it is with some firms. And in that half-hour meeting, we're looking for somebody who demonstrates the understanding of the market that I described earlier, and that actually can explain how it translates into their business. So how is this business going to work? What are the nuances of it? Why is it already getting some customers? Because we're only talking to businesses that have revenue. How's it going to grow? And ultimately, in my case, I really like to understand what the bottleneck is to the business. Is this a business that is bottlenecked on sales, marketing? Is there a product issue? Are we getting customers, but then we're losing them? Are we getting customers, but then we're not getting the pricing we should get? And if I can leave that half-hour call believing in the expertise of the entrepreneur, validating some of the financials, and then feeling like I actually know what the bottleneck is for this business, we would move it very quickly into a good position in our pipeline. And if it has some characteristic, but not all, we start to poke around and ask questions and see if we can just sort of keep a dialogue going as things change and improve with the business.
Yeah. Like you, whether it's the pitch or just talking to a business, I'd rather have something to work with and tweak, add things, delete things. And I guess Koyago being an example of the company was modest size when your firm got involved, and even smaller when I got started with it, but they had something to work from. And so working with an entrepreneur and a business to help it grow versus the highly polished, gee, we're going to shoot to the moon kind of thing. I too would like to do that. And the niche businesses, we're probably honestly going to find more of those here in the upper Midwest, although niche isn't bad, as we've seen with Akoya Go take a business growing 5% a year and turn it into 35% a year. Similarly, other businesses, I'm sure you're seeing some of my other portfolio companies. What about things that maybe hinder your interest in looking further? For myself, I get really turned off pretty quickly if the valuation expectations are out of whack. To me, says they're either overvaluing what they have or there's some lack of awareness of what the market really is. And then I'm the one trying to educate them towards a bad outcome, or not, maybe not a bad outcome, towards something less desirable. And maybe they even have other investors in. So I can get turned off pretty quickly with somebody that a valuation just does not make sense. What are one or two or three of the things that you get hooked on right away that might steer you away from the business?
I think, I'm with you on the valuation question, and it's more that sometimes people just demonstrate that they're not that knowledgeable and haven't really even, done the online research to understand how to pitch a business or how to set a valuation. So, well, I don't expect the pitch to be Warner Brothers produced glossy kind of thing. It is frustrating when somebody comes in and starts telling me the deal that they want done, and then you ask them how much progress they've made, and the answer is very little, and you realize that they've just put the cart before the horse, and then it calls into question the rest of their judgment. Are they doing research on customers, on other things? I just start to get suspicious, and so that's one thing. The easiest way to blow a meeting with me is to answer every question and share every detail as if you have 100% certainty of everything. So we're going to hit 5 million by the end of this year. That's already in the bag. We're going to accomplish this next year. This is exactly how the market's going to go. This is why these competitors don't matter. That lack of humility is very hard to work with. And so we're just looking for people who are more interested in some level of openness, that things are not set in stone and that they're going to have to learn along the way, and that they're building from a foundation where they have enough confidence that they can deal with uncertainty and ambiguity. Because as you know, the second you make an investment, you're on the side of the table of the entrepreneur, and you're probably going to collectively get kicked in the teeth a few times a year for the rest of your working time together. You're going to lose a customer. The market's not going to behave the way you're expecting. And so I just want to see a combination of confidence and command of the subject with humility. And that's usually developed over time from people. And there's a balance. I don't want people who feel really beat up and aren't optimistic about their business anymore. It's fine to be a little irrational when you're an entrepreneur with optimism. But I also don't want somebody who has such little experience that they feel like everything's going to go well, or has the belief that they have to show me and convince me that everything's perfect for me to invest. That's also kind of embedded sometimes in that lack of humility. That's the big thing in the first sets of meetings. If you have lack of command of what you're doing, or you don't understand the economics of it, or you have maybe too much hubris or false hubris, that would be a hard meeting for me to advance from.
Yeah, totally agree with that. If they don't have a lot of traction at the transaction level, they don't have a lot of experience. And so that points again to a company that has a little bit of traction. I know that you all have looked to see companies with revenue, and obviously that makes your job, my job, easier. For me, it might only be a couple of customers, revenue measured in low six figures of revenue or up. What's the sweet spot of revenue for you and for Mairs and Power to generate interest on your part?
The sweet spot's been $1 million, about even. So our average investment has had roughly $1 million in revenue, and I would call that $1 million in SaaS equivalent revenue. If you have, in one case, we're dealing with a school transit logistics provider. They might have 20 million flowing through there because they're purchasing bus and other transit services. We don't really count that. We would look at their net revenue in that case. But around $1 million, we've got as low as 300,000 run rate in a recent investment. And we've got as high as maybe 3.5, 4 million. But it's that range. And we've averaged $1 million because I think $1 million's a nice milestone where we feel like you're investing in the business and the entrepreneur and the idea, and not just the entrepreneur and the idea. And while I love supporting the entrepreneur and the idea, that there's really a lot of risk that people take on when they invest too early before the market has had a chance to react to the product. It's not to knock that form of risk, because that's a really good model for some. But our model is built on making bigger commitments. We're writing generally $1 million to $2 million checks up front, and having a smaller number of investments, and therefore feeling a higher level of confidence that those investments are going to survive and ultimately get to an exit. So, that's why we have it structured the way we do.
So you mentioned the phrase other side of the table, which is actually something I was going to ask you about. So I appreciate you inserting that into our conversation here today. What's one or two of the key learnings? And I know you were investing before joining Mairs and Power, so it wasn't like you hadn't done investing, but change of how you spend your day and the focus of everything you do. But again, what's one or two key learnings of going to the other side of the table, being a pure investor versus an entrepreneur who maybe is dabbling on the investment side or investing for potentially different reasons than you might at Mairs and Power?
I mean, the way you asked how I spend my time, which is actually, it's a question I ask people all the time. I just love learning how people spend their day and how their job actually works in reality. And it's a question I ask our CEOs all the time. How are you spending your time? Some of them are spending it on payroll and some are spending it on sales. And I prefer sales. Now we can always offload some of that administrative burden. But our job is so simple. You raise money for a fund. That's part of the job. Communicate with investors. Then you find investments. We try to see a lot of opportunities to make a small number of investments. Then you diligence the investments, write a check, you help company be successful, you help it exit. That's the cycle. And so for us, we have it broken into fundraising, deal pipeline, and portfolio support. We are a team of 4. We're adding a 4th member back to the team right now. So team of 4 with a lot of support from Mairs and Power. And John and I both work a lot. And, John especially is probably 2 people worth of capacity. At the same time, even the small investments we have more employees than we do. And so I guess I've developed more awareness of how busy this job is. And that's just a reality. And then that in turn has led me to believe that we have to be very focused and efficient in the support we provide. So it'll depend on the company. Like this week, I'm going to a Koyago sales conference. That would not be scalable. I can't do that 16 times a year to every company. It just wouldn't quite work. But in the case of a Koyago, where I feel like the business is at an interesting point where it is scaling and where that conference brings together a lot of customers at once, we have a new product that's possibly coming to market, as you know. I felt like that was a chance to really better understand that business. And that's a company that generally is a fairly distributed workforce. So it's a chance to see more of the team at once too. That's an example of just the calculation I'm making in my head. Is this worth the time? Could this be valuable to the company? Could it be valuable to me in supporting the company? And if not, is there a way I can quickly outsource it to somebody else or refer them to somebody else? Or maybe have, the more junior member of our team do it, or pass. It's not uncommon for me to just say no when I'm asked for support from a company, or to refer them to ChatGPT, which is sometimes just works just as well or better. Yeah. But we, for this reason, we have focused in on money, So trying to help the companies get the money they need, ultimately get the exits they want. So really focused on the financial part of things first. Second, on talent. So we have recruited senior talent for several of our companies. We work hard on the talent side of things when we think we can be useful. And then third, on what I would call sort of growth planning, growth patterns, and trying to help the company see where they should be focusing their energy to break through on the growth side. And, just use what we see from other companies to try to provide that insight, better tracking, better metrics, invest in marketing at the right time, those sorts of things. And if I'm focused on those three areas half the time with our portfolio support, I'm happy, because the other half is just whatever's coming at us that day. And it's a little bit of you're just trying to get the reactive, proactive ratio down, if that makes sense.
Yeah, I live it every day. I absolutely are attuned to that. Hey,
I
how many
was,
board?
I was going to just ask, or you probably experienced this, but sometimes I feel like somebody like you or I who's been around for a while becomes like an entrepreneurial reference librarian. And it is funny. I'm like, I almost wish I could just tell people, please use ChatGPT first and then go to me. But it's hard because people like to hear that human voice.
No, it is hard. You do what you do because you care and you want other people to succeed. I know you're very active in the St. Paul, Twin Cities marketplace. You want the community to have success. You want the tech world locally to have success. So there's a altruistic part of what you do, what I do, to make the universe around us better, yet that could soak up all of our time if that's all we did. And then also, if you look at, say, Gov Delivery, where you are supporting other people, that too is being supportive of folks. And I have several teachers in my family, so I have it in the gene pool of like trying to share with people. But it is a little dicey to try to get everything done. And the other thing, I'm sure you see this a little bit. And how many board? I'll finish the question. How many boards are you on now?
I'm on 7 through Mairs and Power, and then 2 outside private boards. The Star Tribune is one, and then a much larger company board. So 9 plus, plus I just got off one nonprofit, but I was on 2 nonprofits. So it's all, just the math around that is crazy.
It's full. And so where I was going to go with that, you're very busy. And as an investor, what happens often is you pulled into things that are the negative things with a business, which, yes, you're trying to solve them. But in terms of adding value, what you really want are for your companies that are doing well to continue to do well. And so you're always being pulled in different directions as to, am I firefighting or am I adding value? And it's difficult to decide how to spend the time.
Yeah, and I guess that is one benefit of just life, and being almost 50. I'm coming up on 50 in August, actually, this month. I think that you just develop some judgment around that. And I think amazingly, even with that judgment, I think a lot of people do not apply a lot of critique to their own use of time. And I try really, really hard to say, am I spending the right amount of time? And it starts with family. Am I staying healthy? Am I getting to work out? Am I, enjoying life? Then you obviously have the work component. Are you investing time in the right things? It's really important to me that when I commit to do something, I follow through with it. And a lot of people build their entire career just on being reliable, just doing what they say they're going to do. And I try very, very hard to do what I say I'm going to do, help where I say I'm going to help. And that also means trying to figure out not making too many commitments so I can actually follow through. And it's a balance. I think I'll probably perfect it 5 minutes before I leave this earth. So it's just it's one of those things you try to improve on over time. But I think our entrepreneurs, other investors, senior execs, people should challenge themselves. Are they spending time on the things that are making a difference, or are they getting caught up in this reactive mode? Like you said, the board meeting for the emergency takes your whole week, and the opportunity to help somebody hire a head of sales when the company's already booming gets pushed to the side. that's actually a really bad use of time. We ought to be tripling down on our winners and slowing down on our companies that are struggling. It's hard not to focus on the struggling ones.
Yeah, yeah, totally agree with you on that. You said something about doing what you say you're going to do in some of the presentations that I give. I actually have a slide on doing what you say you're going to do. And personally, some of the due diligence process or getting to know somebody over time is an indirect way to learn about the entrepreneur and are they going to do what they say they're going to do. So they tell you X, Y, and Z. And if you start to develop that relationship before they actually need money, you can get a sense for that entrepreneur and get to know them and the business before actually writing the check. So I wholeheartedly agree. Doing what you say you're going to do, both for you, for me individually, but also for that CEO out there who's trying to get money from investors.
Yeah. And, it's not as, we have like an epidemic in the country where everybody's really busy. And I think that probably in the 1700s, if we ran into somebody on the street, they would have been like, I'm so busy. People just love being busy. It makes them feel like they're worth something and they're valuable. And that is normal. And you still have to move the ball that you're holding. You still have to be able to advance things, follow through, make commitments and follow through on them. And I think that it's not necessarily a lost art, but it's an important art to be able, as an entrepreneur, as an investor, whatever, to be able to follow through on things. And I'm very respectful, as you are. I know that things don't always go as planned. And so what I want to see is that you took the right steps to make something happen the way you told me you were going to. And if it didn't work out the way you expected, that you at least have an explanation or a theory, and then you have a plan for what you're going to do next. And it's amazingly not rocket science to just stay focused on what you're trying to accomplish and to follow through on at least the actions you said, even if you can't always control the results. And I try to show that by example with our entrepreneurs. So they see that in me. Hopefully it has some echo effect into their own work.
Sure. All right. So we're headed towards the finish line here. Maybe one quick question and then wrap up question. Quick question would be, as you look at other investors, not to knock them, but to say other investors might do things a certain way and you prefer to do it a different way. For me, a lot of people have very big portfolios, and I understand the concepts of diversification. I go the other way. I want high conviction. I want to have a tight relationship with the CEO. I want to be putting my fingerprints where they're asking for it and where I think I can add the most value. What's maybe one thing? I think I have my answer for you because I know you, I know Mairs and Power, but what's the kind of one thing that might be the Scott Burns / Mairs and Power approach versus the way maybe other investors do it?
If I had to say the one thing, it would be staying focused. I want to see businesses that are focused on what's going to get them to the next stage of growth. And they just understand that, and other things might matter, but they're really focused on what's going to drive that next stage of growth. And I think that because we're coming in when there's revenue and we're doing some things that are different than other companies, it's all designed to be honed in on, we want to invest here and then have the growth go up. And it's just constantly trying to focus on what is the thing that's going to drive growth and to align ourselves with the CEO, founder on that topic and try to avoid, I don't want them to get my help in setting up a HubSpot discount or whatever. I want to focus on growth. Yeah, there's other things to it, and we've talked about a lot of them, but it all focuses in on that. And that's how I'll be measured in the end. And it's what'll drive them to the exit where we both get to celebrate at the finish line.
Absolutely. Okay. What's one thing that you'd like our listeners to take away from our session here today?
If you are an entrepreneur who is starting to grow a business into the type of business you think we might be interested in, please reach out. We're not hard to reach. So It's easy to connect with us, and we'll at least have a half-hour call with you, see if we can help. And we want to connect with as many entrepreneurs in this region as possible. So if you know someone, if it's not you, someone who's interesting, drop me a note and we'll try to get them on our radar too. That's probably the main thing.
Great. Scott, thanks for joining us today. I know that I've had you at our Club E lunches in the past, have you on a panel this coming fall. For anybody who'd like to learn more about that, they can go to brimacombe.com, our website. Thank you for joining us today, Scott, and I look forward to talking to you again soon.
Thanks a lot. Thanks for having me.
Thank you.